Good morning, everybody. I'm Dan Yergin, and I want to welcome you to the session on the global energy outlook. Our topic this morning is energy security, a subject that has great constants and yet also changes as circumstances change. And this is the subject we're going to explore this morning. But at the same time, it also exists within a context. And the context that we're going to talk about is the impact of the turbulence in the global economy, the recession and the recovery, what that means for energy security, and also what it means in terms of the energy outlook and how it's been changed, what's been changed by what's happened over the last 2 years. To address these questions this morning, we have a very distinguished panel. President Aliyev of Azerbaijan, Tony Hayward, the Group Chief Executive of BP, Khalid Falih, the President and CEO of Saudi Aramco, Peter Voser, the Chief Executive Officer of Royal Dutch, Andrew Liveris, the Chairman and CEO of Dow, and Thierry, Desmarest, the Chairman of the Board of Directors of Total. So we're just going to dive into it. I'm going to ask some questions of each of our panelists to get things started, and then I expect that the discussion will carry itself. So I'd like to begin with President Aliyev and ask you the term energy security. What does that mean from the viewpoint of Azerbaijan and as you look at the global energy system?
First of all, I'd like to say that most important for us from the point of energy security is a diversification of supply routes. And we managed to achieve that, and today we have a diversified pipeline system which can transport our natural resources to various directions. At the same time, it's very important to provide the balance of interest between producers, transitors, and consumers so that we can have a sustainable and long-term energy cooperation. If this balance of interest is disrupted, it may create certain problems. Another issue which is important for us is a fair market price for our natural resources, particularly for gas, and full commitment by all the parties to the signed contracts. I think these elements in a package can provide much more confidence for producers and I think for consumers with respect to energy security.
Yeah. Mr. President, let me ask you, of course, for the first decade or so of Azerbaijan's existence as an independent nation, the focus was on oil. The spotlight is certainly turning to natural gas. Looking out 5 or 10 years from now, what would you see in terms of Azerbaijan's role in a global gas market, and what are the obstacles to getting there?
I think that definitely the role of Azerbaijan in the global gas market will grow because huge discoveries of gas reserves will allow Azerbaijan to transform to one of the major gas exporters. As you know, the minimum proven gas reserves in Azerbaijan are more than 2 trillion cubic meters. So that will be enough for us and for our export capacity for decades. And most important is now to provide that there is a reliable and long-term market for our gas. I mentioned that we have already a diversified gas supply system, but that system can transport only today's level of production. What we're planning to do is to increase maybe 2 or 3 times, maybe more, gas production. To do that, we need a much bigger capacity of pipeline infrastructure. And of course, in order to invest major investments in new developments and in pipeline infrastructure, we need to have a clear understanding who are our consumers, what is the market regulation in those countries, is the markets reliable and long-term for us or not. So after all these issues are in place, I'm sure Azerbaijan will use its gas potential as successfully as we did with oil development.
Right. And I guess the customers are coming into view?
Yes, we have customers. We have customers around us. Azerbaijan is now transporting its natural gas to all the neighboring countries, despite of the fact that some of these countries produce much more gas than we do. But our target is to continue diversification, to find new markets, particularly markets in Europe. And we know that European consumers are also looking for diversification, for new sources of gas supply. And the Caspian gas, particularly gas from Azerbaijan, can be, for the time being, the only new gas source for Europe.
Thank you. Tony Hayward, how has the global recession changed the energy outlook and also changed what BP is doing?
Well, I think if you step back, the answer is not much. If you step back and look at the next couple of decades, which is the time frame that the industry operates on, then the demand projections today are no different from what they were a year or 18 months ago. Energy demand for the world is projected to increase by around 40% over the next 20 years, all of it, of course, in the developing world, in the non-OECD. And the challenge I think the world faces is how do we provide that in a way that the energy is available, the light stays on, it's secure to address the mismatch between where energy is produced and where it's consumed, it's affordable, consumers can afford to pay for it, and of course ultimately it's sustainable. So, and I think the big point is that even in the most aggressive climate change policy regulation conceived, that is to limit the concentration of CO2 to 450 parts per million, hydrocarbons will still represent around 80% of the energy mix in the next 20 years. So I think the simple answer to your question is not much has changed, Dan. As far as what should we be doing, I think the international oil companies should focus on what they're good at. And from my perspective, that's sort of three things. The first one is to drive efficiency into the industry, which is about using our technology, our know-how, and our capability, and our proven skills of capital allocation and risk management to ensure that supplies turn up as cheaply as possible. The second one is to continue to press the frontiers of the industry to give access to new supplies to the world. That is drilling wells to 10 kilometers in the deepwater Gulf of Mexico. It's beginning to explore under the ice in the Arctic. It's developing the difficult, challenging reservoirs of the world, tight gas, shale gas, those sort of things. And I suppose the third thing that I think is an important role for IOCs is to begin to develop at the right pace alternative forms of perhaps more sustainable energy. And in the case of BP, we're focused on biofuels, wind, carbon capture and sequestration, and solar. And the thing about IOCs is we can do those sort of things at scale. So the challenge is how do we do those things at scale?
Well, given, as you say, the long-term nature of energy, that 20 years from now, the world probably still is 80% hydrocarbon, but we have seen some changes in demand. Demand particularly for oil, and whether it's the recession or structural changes, maybe you'll say a word about how you see the shift in demand.
Well, the obvious thing is, of course, that in the mature markets of Europe and Asia, demand for oil products is now in structural decline. None of us will sell more gasoline than we sold in 2007. However, that is, of course, being offset by very strong rising demand in the markets of the East, in particular China, where, as many of you will know, last year 13 million cars were sold in China, more than 1 million cars a month, and demand there continued to rise strongly. Oil imports into China in December were 5 million barrels a day. So the challenge is how to actually meet this growing demand for oil and to keep the lid on prices, actually.
Right. It was a psychological shock for the United States last year to discover that it's now the second largest automobile market in the world, and that China, at least at this point, is way ahead of it. So, well, that gets us to the overall supply. And let me ask Khalid to address energy security from the viewpoint of a company that invests tens and tens of billions of dollars in terms of maintaining and developing new supplies, also with a very long-term horizon, and how you look at the definition and meaning of energy security.
Well, thank you, Dan, and good morning, ladies and gentlemen. I, first of all, would like to second what Tony has said. We very much see the long-term energy outlook in pretty much the same prism. We see long-term energy demand rising, in fact, doubling by the year 2050. And we see fossil fuels in general still providing the predominant share of that energy within that time frame. Petroleum will continue to provide the energy for the mobility sector of the economy, whether it's air transport, sea transport, and still be predominant in car and truck transport for the next few decades, despite the success that we will inevitably achieve in introducing new renewable energies into the transport sector. But it will be slow, and petroleum will have to provide the bulk of our energy and mobility. We feel, first of all, that the whole issue that came to the surface and created a lot of concern about peak oil is behind us, I hope, that the technical facts have been brought to the surface and that this issue of peak oil has been pushed behind. Unfortunately, it did contribute in a large way to the volatility and rising in prices. Our energy, as mentioned already, is a capital-intensive energy, and it's a long-term investment energy. Decisions that we make today will bear fruits in terms of reliable supplies to the consumers anywhere between 7 to 10 years, and it could be longer in the kind of frontier areas that Tony Hayward was talking about, where major investment decisions need to take place. So there is a linkage, a very strong linkage between the security of supply that consumers are asking for and rightly deserve, and we as an industry need to provide, and the reverse, which is the security of demand that we, the producers of energy, need to also ensure. Part of the stability and security of energy, of course, is ensuring that there is plenty of spare capacity in the market to absorb the shocks that inevitably happen in a complex business like ours, whether it's natural disasters that have happened to producing areas or conflicts or disruptions due to civil strife. It's no news that Saudi Arabia and Saudi Aramco has played a major role, in fact, the major role in providing that element of security in the petroleum markets. We have traditionally attempted and kept spare capacity exceeding 1.5 million barrels, which is a very, very expensive capital investment to make and operating costs to maintain on our budgets to keep that spare capacity, that cushion, to bring to the market when it's needed. Today, it's over 4 million barrels, as we have absorbed some of our production to adjust to the recession of 2008, 2009. But we are comfortable keeping that cushion. We believe in the long term that capacity will indeed be used, and it will be used for the benefit of stability in the overall market, as well as bearing long-term fruits for us as holders of the largest reserves, because it will show the kind of responsible stewardship and management of these resources that the consumers around the world expect from Saudi Arabia and Saudi Aramco. Last year, despite the recession, we maintained our investment regime and, in fact, brought close to 2 million barrels of new capacity, including some of the largest fields ever brought on stream, on schedule, and that capacity remains today. But from our perspective, we don't see the reciprocal assurance from consumers, and I'm talking about policy makers in particular, in terms of giving us the long-term signals that we need as producers to maintain that kind of investment regime and commitment to energy supply. There is too much rhetoric in the public domain about moving away from oil, about independence of various nations in energy, which is unachievable and in many ways misleading to the publics that it's addressed to. Instead, we feel energy security should be addressed in the framework of interdependence, which I referred to when I talked about the linked and intertwined relationship between suppliers and consumers. That needs to be acknowledged, as well as acknowledging the fact that we will be relying on fossil fuels and petroleum for the long term. One last word on another element of security, which is the environmental element. I think consumers, and rightly so, are concerned about long-term security of the planet, long-term security of living standards through the environmental impact of the fossil fuels that we will be producing. And I believe the energy industry, as well as other stakeholders, including governments through incentives and directing some of the stimulus packages to spending, needs to focus on efficiency and cleaning the hydrocarbons that we will be consuming and burning. We, on our part, are focusing on that in our investment strategy, but I believe all stakeholders, including energy industry and other academic research institutions and governments, need to join in this as a collective measure.
Are the signals from either the marketplace or the signals, as you say, from the consumers affecting your own investment decisions as you look out over the next 10 years?
Well, as I mentioned, for now, we of course, on the upstream are sitting, a third of our capacity is idled. But it's idled and at the same time ready to come on stream on a very short notice. So today, our investment for the foreseeable future is only to replace decline and depletion of our existing capacity. Long term, if we see that the demand-supply balance is calling on us to add capacity, we will certainly consider it. We're also investing heavily than in other parts of the value chain. One element of energy supply lack of reliability over the last few years was not necessarily in the upstream sector, but we had bottlenecks in the refining sector and the supply infrastructure. And we in Saudi Aramco, despite the very poor profitability in refining today, are investing heavily in refining. We're investing in the most modern fleet of double-hull tankers to get our crude reliably and responsibly to the market that needs it. We're spending money on pipelines and terminals to make sure that people understand that the largest supplier of petroleum energy is committed in the long term not only to provide the BTUs and the molecules of hydrocarbons, but to provide them to the market in a reliable, environmentally responsible way.
Thank you. Peter Voser, security, energy security implies stability in investment. Turbulent times in the economy imply or lead to instability in investment. What impact do you see that this turmoil has had on the longer-term investment horizons of the industry and what it's doing and how you're dealing with those questions at Shell?
Yeah, thanks. Good morning, everybody, first. Yeah, this is absolutely the key question. what the industry has to deliver in the long term is actually we have to increase the energy supply, and we heard some numbers from Tony. Even if you go further out, most probably the energy demand will double because we have to deliver energy to more than 9 billion people over the next few decades at a much lower cost to the environment. This is an extremely challenging but also a very interesting proposition for the energy industry. So absolutely key is actually that we keep investing throughout the cycle. Despite the fact that we have a recession around us, the bigger international oil companies have kept actually steady on the investment side. At Shell, for example, in 2009, we had the highest capital investment budget ever in our history, which was $32 billion, and from the IOC side, this was the highest budget. We will continue that also in 2010, because we know if we don't push this in a few years' time, as demand comes back, despite the fact I'm very happy to hear the barrels you have put aside for the future, the world will start to see a supply-demand imbalance, and I think we have clearly seen that at Shell, and we are keeping investing. The second point is clearly also we need to keep going on innovation and technology investments, and this is actually driven towards more energy efficiency. This is driven by the fact that we need a lower carbon world. So this is about fuel standards. This is about reducing CO2, which Tony mentioned as well as, for example, through carbon capture and sequestration. But it is also actually working on alternative energies, including some renewables. But let me also bring some realism into the discussion here, which I miss a lot when I travel around the world. I have the feeling that from time to time everybody thinks we can just put the light switch from not on to on, and tomorrow the issue will be solved. Historically, we know that to gain 1% global market share in the energy industry, you need on average 25 to 30 years from the moment you start to do the development into a commercial development and then into a consumer development. So we should also be realistic about that and actually work on both sides. So we need the investments in the oil and gas industry on our fossil fuel side, whilst at the same time we need to bridge into a lower carbon world, including actually biofuels, renewables, etc. So I think what we are looking for at Shell is actually that we get a more balanced discussion, that we can work on both, and for that we need technology and innovation. Let me say just a few words about gas. I think gas is actually underestimated what it actually could do to the world over the next 10 to 20 years. So this is now rather short term in an industry which works 30 to 50 years. I think we have seen over the last few years that there is plenty of gas. We have heard from the President as well. So here we have an energy source which is actually from a CO2 point of view much better than some other fossil fuels which we are using, like coal for electricity generation. So I think that's where we should focus a lot over the next 10 to 20 years, getting actually the gas much more up the agenda and getting it actually into the markets at reasonable prices for the consumers, but also at prices for governments and for IOCs, where we actually can make money as well.
Right. Peter, energy security, when it became a big issue, the world was divided into two, between producers and consumers. Is that still a useful concept, or is it blurred?
I think the way I look at this is the world needs energy, and it is up to the producers and it's to the consumers, including the IOCs, to deliver an energy mix which long-term gives us a sustained energy delivery at an affordable price and at the cost to the environment which is acceptable. So I see in the future a much closer collaboration actually between the various stakeholders, including the governments, to actually drive this agenda forward. And I think I see on the OECD side, but also in the developing countries at this stage quite clearly, let's say, a willingness to engage in that process much more in order actually to reduce volatility in the future. I think we have seen what volatility can do to the economy, like we are, for example, in 2008. And I think we need to get more stability into that. And this is about pricing, is about volume, is about delivery. And it is clear that this needs collaboration from all sides.
Well, let me turn to a consumer. Dow Chemical is one of the largest consumers of energy in the world and the largest industrial energy consumer in the United States. Andrew Liveris, what does energy security mean to you, and what does energy insecurity do to your business?
Thank you, Dan, and very privileged to be amongst this esteemed panel and be representative of a consumer, which, of course, as you already said, we are. In fact, we're a proxy, I think, for all types of consumers. Clearly, we're an industrial consumer. I think the comments already said, I won't repeat, but energy security, I want to make sure the point Khalid made is repeated, doesn't mean energy independence. That is totally a myth. Energy security is interdependence, and of course, for a company like ours, it's very, very much deeply rooted in the notion that we add value to energy for all humanity in a variety of different products. Now, what's happened in this last 5 or 6 years, and we firmly believe that 2009 was an aberration, a great recession. If you think that's a data on the point on the curve, then we're all mistaken, right? I mean, clearly, the tectonic shift that's happened in this last decade is a little indicative of the one in the early 70s and the early 80s, which was supply-driven. This one, of course, that's just happened, and you've written about this, as have my colleagues on the panel, is a demand shift with the rise of the East, the rise of China, the rise of the industrial base of China, the energy intensity of that economy, albeit they're trying to get better. India, elsewhere, the emerging world, is creating a new demand cycle, which, of course, has brought supply and demand a lot closer, which, of course, has raised the price point of inputs. And just to give you our numbers, in 2002, on a normalized basis, we, large consumers we are, we purchased 1 million barrels a day equivalent oil and gas. That's roughly $8 billion in that in 2002. In 2008, that number was $32 billion. So the price point changed, clearly. So that meant
$8 billion to $32 billion.
Yes, 4 times. So, and I don't say that lightly. That's a huge, huge increase of all the prices of my products. In essence, if I could raise the prices of the products, what hurts people like us and hurts people out there in general, and why we need a different approach to energy security is the word Peter used: volatility. So pre-01, 02. We could count on fossil fuels, oil and gas, at certain trajectories on the price points based on the production that was then available around the world. And with no China consuming like they were consuming, those were predictable price points. And so therefore, what you saw is value add to energy was a predictable thing, and clearly there was volatility, but you could financially hedge it. If 90% is a physical hedge, 10% is a financial hedge, you can cope with that. When $32 billion is now your number, and the volatility is almost quadrupled in terms of the price points, and the volatility between 02 and 08, you have all the data you want. You could get a 10% aberration in a month, in a week, on gas or oil. And when you got that aberration, people like me, who have a trajectory for investment like the oil industry does, 20, 25-year paybacks, suddenly stop. I need certainty in the trajectory. And how do I get that? So energy security needs a comprehensive approach, and we've been saying this since 03, 04 on every panel we've been on, is all of the above. It's responsible fossil fuel development, because as Tony says, fossil fuels will be here for as far as we can see. So responsible, environmentally sound fossil fuel development at the new cost curves, and deep sea and all the things that these guys have innovated with is necessary. The President's new fines are necessary. We need to go everywhere and be responsible. This is a very big part of an energy plan. At the same time, you need a menu of options. As a consumer, you now have to have new physical hedges, said another way. So all the alternatives need to come onto the table. Now, alternatives that make sense. What are those? Well, we're still innovating. We need to innovate. Just like JFK said, put a man on the moon in the early 60s. How were we going to do that? We didn't know. The nations didn't know. No one knew. But scientists responded to the challenge, and we're seeing that. And innovation in solar and wind and all the things that you're reading about and hearing about, not just in the developed world, China is one of the largest developers of solar. So physical hedges in the alternative space, very necessary. But how do you do that if you don't know your price points? So you need some degree of predictability. Price on carbon, climate change, price on CO2 is a very necessary thing. You can't have that uncertainty sit on top of the other uncertainty, which is demand and consumption. So those things are very necessary. Then I get to the third bucket, which is the low-hanging fruit of energy efficiency. The early 70s, early 80s, Europe, Japan, and other nations responded with national standards on energy efficiency. I mean, the average US home has 2.5 miles of cracks in it, okay? Every US home, every day, leaks air that can fill 2 Goodyear blimps every day. This is a national tragedy in the US. So fuel standards in vehicles, yes. Building standards, absolutely yes. Industrial efficiency standards, my company has done that for decades. It has quick paybacks, cogeneration on site, a whole lot of other things. There are tools and technologies we already have on efficiency. And, you know, if you put your mindset around national goals on efficiency, and I think the US is the one that hasn't done that yet, but is starting to, and even the State of the Union address last night spoke about that, and I applaud that. You've got to get all three right: responsible fuel development, alternatives, and putting innovation to work, and of course energy efficiency standards. Those three things, and a comprehensive approach to it by nation.
All right. Price on carbon, do you have a view? Would you rather see that as a carbon tax or a cap and trade? Or?
Well, you know, my oil industry colleagues are going to disagree, but you know, we're public with the fact that we need a market price on carbon that actually changes behavior. And a carbon tax just gets passed on and won't change behavior because you can pass it on. So you do need a price on carbon. You need an intelligent way to do it. I am not for cap and trade where the financial speculators make all the money, and I understand that point. So we need a way for industrial and, in fact, every consumer to not see it as another way to get taxed. You need to actually reward behaviors. Reward behaviors how? By deploying some of this money against the development of these technologies.
Thierry Desmarest, whether international oil companies, IOCs, supermajors, whatever you call them, what's their role in terms of energy security?
Well, I think they are in a central position. It's sure that when you look to the share of the oil production, which is made by the international oil companies, it's only something like 15 or 16%. If you look to their share of investments in exploration and production activities, it's more between 22%. So you have, coming from the international oil companies, a contribution to the necessary effort of investment. And I would say the IOCs are taking care of the most challenging projects. It's not because they have a masochistic approach, but I would say for the resources which are relatively easy to develop, the countries who own these reserves don't generally feel that it's really necessary to bring IOC. So we have to consider that we must be the specialist of challenging projects in all areas.
So as a specialist of challenging projects, interesting phrase, do you see, with the uncertainty about price, uncertainty about regulation, uncertainty about carbon, a risk of kind of a wait-and-see attitude on the part of the industry, either imposed upon them or driven by the dynamics of their own situation?
No, I don't think so. First, because it's linked to your question, I think nobody has mentioned the fact that the financial crisis, in fact, as a consequence, is that the oil demand has been reduced in the last 2 years by 3%, while we were expecting before the crisis demand to grow by a bit more than 1% per year. So in fact, as most investments have been done as if the crisis has not taken place in the exploration and production activities, if we come back to the concept of peak oil, it pushes the peak oil a bit further, the financial crisis. It may look a bit paradoxical, but I think that's the fact. I don't think that the oil companies will wait. For international oil companies, it's clear. The companies have kept their E&P capital spending unchanged last year. They announced the same figures for next year. Elsewhere, there have been some reductions, but I would say it's not dramatic. Concerning the capacity of the industry, all companies included, to meet demand for the long term, I would say the problem of peak oil remains. We have always been relatively prudent in our assessment of peak oil date in total. Between, I would say, the International Energy Agency, which was extremely optimistic a few years ago, a bit less today, and some so-called experts who were announcing that the peak oil has already taken place. In our opinion, it will be very difficult to raise the oil production worldwide above 95 million barrels per day, which is something like 10% above today's level. So it's not enormous. It's not that we lack reserve. There are plenty of oil to be produced, but a lot of it is difficult to be produced. Huge resources like the Athabasca oil sands, for instance. When you look to the news flow of the last 2 or 3 years, you have just seen a lot of postponements of projects. Not that much because of lack of profitability of projects, but also with environmental concerns. It's an example among others. So I think we must keep in mind the fact that in a few years from now, the market may be in a relatively difficult position, and, well, the energy security concerning oil, because I think for gas, we have certainly more time, will be a big problem.
Thank you. President Aliyev, we've been talking about volatility and what it does to companies. Maybe share a word with us. You're responsible for a country, what volatility does for you, for a country, and how, when you have these sudden upsurge in revenues and then down movements in revenues, how do you manage them to deal with stability, inflation, and all those issues?
I can tell you that the reforms which were conducted in our country for the last several years allowed us to create a sustainable economy and a diversified economy. Less than 20 years ago, Azerbaijan was part of Soviet Union, and we had 0% in our economy of market economy segment. Today, market economy is 85% in our GDP. We used the wealth which was generated from oil and gas in order to invest in non-energy sector, industrial production primarily, and thus today we managed to overcome the difficulties of the crisis and also the changes in oil price with minimum losses. I can give you several figures which clearly illustrate what happened in Azerbaijan in 2009. So GDP growth was 9.3%, industrial production growth was 8.6%, inflation rate was only 1.5%. In 2009, despite of the dramatic drops of oil prices, our sovereign oil fund accumulated more resources. And these figures clearly show that our economy can tolerate such kind of unexpected developments. Of course, we also suffered from economic crisis and managed to mobilize all our resources. I can also tell you that one of the important elements in 2009 was, unlike many countries in our region, our national currency did not lose value. It was stable, so that was a big support with respect to the social protection of the people. And today's level of oil price, I think, is acceptable for companies, for consumers, and for the countries. This level of price allows us to invest more, to find more oil and gas. At the same time, it is also acceptable for consumers. So the balance of interest, which I was referring to in my previous comments, is observed now. So I hope that in 2010 we will implement all the major projects which we have in mind. I can tell you that in 2009, investments in Azerbaijan in total were close to $10 billion, which for our economy is a huge amount. And in the future, I think that already balanced oil price will allow us to continue to develop. By the way, during the last 6 years, Azerbaijan's economy was the fastest growing economy in the world, and total growth of economy in 6 years was 300%. So of course, in the coming years, we will not enjoy the same speed, but what we have already achieved, accumulated, and managed to redirect from oil into non-oil sector will allow us to continue to develop successfully.
Thank you. Iraq. Iraq is a subject for three of the IOCs on this panel, and with different perspectives. What are each of you doing or not doing there, and what kind of expectations do you have in terms of timing and what's going to happen? Tony, let's...
Well, we're, I think, cautiously optimistic about the potential that Iraq can play in actually providing a very big and important new source of supply to the global oil markets. BP is involved in a major contract to redevelop an existing field that, in fact, BP found back in 1953, as it turns out. The field is today producing 1 million barrels a day, and we have a plan to take it to 3 over the next 10 years or so. And I think if all of us who are now participating there are reasonably successful in delivering on the commitments that we've made, then it's quite likely that we will see Iraq increase its production to perhaps around 10 million barrels a day within about 10 years. I think it won't be faster than that, although if you added up the contractual commitments, you may draw that conclusion. I think the realities of the challenges of execution on the ground and the need to build capability on the ground will mean that things will happen a little slower than all of us are perhaps planning on today. But I think the reality is that absent any unforeseen political events, which of course you can't rule out entirely, then undoubtedly the resource is there. It's a relatively easy resource to bring on stream, and there's no reason to believe that Iraq can't be producing 10 million barrels a day within 10 years by 2020 or so. You know, that I think is an important contribution, which is back to the debate about, you know, where's the new source of supply going to come from and what's the nature of the challenge. And the way I think about this is if you assume the world needs 100 million barrels a day of oil in 2030, and Thierry and I will debate whether it's 95 or 100, but, you know, if you build it, which doesn't sound very much, you know, today we're producing 83, 84, Khalid's sitting on 4 or 5 million barrels a day capacity, so it sounds pretty straightforward. 10 million barrels a day is easy. The problem is, of course, that oil fields don't stand still, they decline, and they decline typically 4 or 5% a year. So if you build that decline into the forward projection for the next 20 years, the gap is 50 million barrels. 50 million barrels a day. So the industry has to bring on stream over the next 2 decades 4 times what Saudi Arabia is producing today. That's the way I think about this supply challenge that we are faced with. I believe the resources are there to do it. It needs the investment, the fiscal framework, the regulatory framework, and the partnership between governments, IOCs, and national oil companies to ensure the supply turns up. So it's entirely possible, provided we have the right framework within which we can conduct the activity.
Peter, you also have a large commitment looming.
Yeah, we're actually in 2 fields in Iraq. So one is West Kurna, and the other one is Majnoon. I think not much to add to what Tony said in terms of the development. I think the resources are there. Yes, I do agree it's part of the easier oil, and I think what we as IOCs also can bring to Iraq is obviously technology, because the country is, from a technology point of view, from a usage point of view, most probably 2 decades behind, so we can actually bring that. I do see the challenge in the same way. So this is a huge challenge, which I said earlier, to deliver this increased energy. Let me just put a number against what Tony described. This is roughly, according to official estimates, we'll need $27 trillion actually to get to the point which Tony described. That's just about an enormous factor more than what the world has just spent to actually bail out the banks and put stimulus into the market. So this money needs to be earned. We talked about volatility. So Iraq can actually bring, hopefully, some stability to that, but it needs to be developed, and we need to earn the money as well so that we can actually finance these $27 trillion over the next 20 years.
Thierry, how does Iraq look? Looks a little different?
Well, I agree on the fact that Iraq will play a key role in the equilibrium of the market in the coming years. In terms of corporate policy, we have a very consistent policy of minimum return that we want to have for our projects. We have seen a lot of excitement of the industry on these projects. We have been a bit less enthusiastic because we think that our priority is to bring a return to our shareholders in line with their expectations. So we have taken just a minority position on a project, but we are not particularly concerned because there are plenty of other projects in the world which we give us our expected returns.
Right. Khalid, you run a industry, you have about 10 million barrels a day, give or take. What do you think of this? Oh, no, I was asking Khalid next door for a response.
When you Iraq?
Yeah.
Well, we obviously feel and have felt, especially the last few years, a lot of pressure being placed on Saudi Arabia to respond to all of the growth projected in demand. At one point of time, IEA and others were using Saudi Arabia as a plug-in at the end of the imbalance between supply and demand, and they showed us producing 24, 25 million barrels sometime in the future, and that raised a lot of concern. We no longer have that kind of pressure. We welcome the opportunities in Iraq for Iraq to produce more and to be able to better its people and its economy. We will, I believe, still be called on to produce at least as much as we've been producing, if not more, and we're ready to do it. I would just advise Tony, when he is calculating the decline and what the industry has to do to take our 12 million out of the formula, because I assure him we're going to take care of that. It's not.
Yours is built in, my friend. Yours is built in.
38.
We have a long list of projects in our portfolio that actually will do more than offset our decline. I say that in just reassuring anybody who's listening and concerned about decline and ability of industry. I would just also respond to Thierry and say The industry as a whole have been amazingly capable of tackling complex challenges in terms of not only the technology that we've been able to develop and deploy, but also integrating many, many disciplines, mobilizing huge amounts of capital, and bringing these complex projects from complex reservoirs all the way to burner tips at the consumers in a very responsible way. So the 4 trillion of oil that the planet has been endowed with, only 1 has been produced, plenty of resources out there. Granted, most of what remains is a lot more difficult and complex than what has already been produced. But I'm a believer in our industry, and going back to what Peter and Andrew said about innovation, technology, and the capability of the talented people that we have in our industry, I have no doubt that we will be able to do a lot more than the 95 or 100 that are projected in the next few decades. But long term, it is a depletable resource, and long term we will have to get off fossil fuels, and everybody needs to responsibly work on a smooth, gradual transition, but we're responsible also to communicate that it's going to take decades and not years. One point I want to respond, if I may, Dan, to the issue of price that Andrew talked when he mentioned his cost of feedstock quadrupling in a matter of years. It's a fact also that our costs have went up in multiples. We have, within Saudi Arabia, for comparable projects, seen that the cost of developing a barrel of oil capacity between the early part of this decade and last year went up by a factor of 6 to 7. All onshore increments producing relatively easy oil to produce. So even the cost of conventional easy oil, if you want to call it that, is going up. The cost of production and operating costs are also going up, and that is reflected. An oil price escalation that we saw in 2008 is very bad for consumers, and it's also very bad for producers because it causes a lot of disruptions in the market. But ironically, it's also the lower end of the price range is even more destructive, and we've seen the impact on the industry and many smaller independents, but we've also seen the bad impact of lower prices on producers of alternative energies and renewables. And unfortunately, many of them went out of business in 2009 when oil went to $35. So I think we have to be realistic. We have to aim. We cannot fix prices. Market will. But hopefully through responsible management of our investments and communication, we can aim for a price range that will keep us investing, keep consumers able to live their lives and produce their products without too much volatility that is very disruptive.
We only have about 60 seconds, so this is a question for Peter, Tony, and Thierry. Very short answer. Unconventional natural gas. Big deal, very big deal, just a North American phenomenon, global phenomenon. Peter.
Big deal and necessary.
And North American or global?
Global.
A complete game changer in the US, certainly. Transform the US's energy outlook for probably 100 years. And yet to be seen whether the same phenomena can be applied globally.
Thierry.
I think, first, it's good news. This being said, there may be a few difficulties linked with environmental problems which can slow a bit the pace of growth of the production in the US. And there will be opportunities elsewhere, but not everywhere.
Right. Mr. President, you have so much gas, you don't need to worry about unconventional gas.
For the time being, yes.
For the time being. This has been a terrific panel. We've had a great discussion, and I'd like to ask everybody here to join me in thanking them for this. Thank you.
and my wife.